Good morning. Today is Tuesday, May the 30th, and the time right now in Singapore is 10 o'clock sharp in the morning. And yesterday we have market holidays in both the United States celebrating their Memorial Day holiday, and we have also bank holidays in the UK. So market was understandably quiet. So there was no update in US equity markets, but basically in the futures contract trading at the Chicago Mercantile Exchange, the futures contract actually inched up a little bit with the Nasdaq 100 up 0.5% in electronic trading. So today we're going to do this first with the Dow Jones, but before that, I just want to give you an update on what happened over the US debt ceiling negotiation. Essentially, what we have heard is that the White House and the Republican has an agreement in principle to raise the debt ceiling beyond 2024 to 2025, and the bills right now is going through both Chamber of Congress, and the House will have to pass through the legislation. But I think the latest report is that there are some members within the Republican Party, especially the 25 members who has basically made life difficult for the Speaker, Kevin McCarthy, during the midterm election before he was made Speaker of the House, is unlikely to vote on this bill. So basically, we are not sure whether this bill will ever get passed in the House of Representatives, not to mention about the Senate. So only when the House passed the bill, then the bill will go to the Senate for voting, which is controlled by the Democrats. And there are also members within the Democrat Party who is not too keen also, although they are minority, they are making noises about the agreement between the White House and the Republican Party as far as the debt ceiling is concerned. Right now, we are only 1 day away from the June the 1st, which was originally touted to be the X date. Now, Janet Yellen came in over the weekend and said that maybe she has another 5 more days before the Treasury runs out of money, and that will be June the 5th. But technically, I think the US has run out of time. They would have to vote on this by tomorrow, which is Wednesday, and for it to be passed and then to be presented to the president for his signature to sign to law. So now the question is, the market obviously is happy with the fact that one uncertainty has for now been removed, in the sense that there is an agreement in the debt ceiling. However, passing the bill through Congress is another story altogether, and whether they can or cannot get it through Congress is up in the air. And in the event that this bill do not get passed, then obviously we are looking at the real possibility of a default this time. So do not celebrate too early because anything can still happen. Okay, so as far as the technicals are concerned, the Dow Jones has actually bottomed out last Thursday at 32,586. You can see Friday the market was optimistic that something would be done, and obviously Saturday the news came in that it has a in principle agreement, so that should be supportive of equity markets, seeing by what the futures market has actually been doing yesterday during the electronic trading, despite the fact that US markets are closed. So we will see what happened. Okay, and over in the S&P 500, we get a little bit more bullish on Friday. We can see the market actually traded to a year high at 4,212. And this is again the year high, which is marginally above the last week high, which is essentially 4,212.9. So it is actually still within the bracket of prices. So if the market actually do inch up, I think the place where the market will actually be quite vulnerable to profit taking will be somewhere between 4,240 to 4,340, with the August 2022 high at 4,325.3. So all taken into consideration, this could be a danger area. So be very careful chasing this market ever higher, and just be a little bit cautious. Okay. Over the Nasdaq, needless to say, the Nasdaq has been the most bullish throughout the whole year so far. And on Friday, we saw the Nasdaq went up to 14,330 thereabout, and this is within the bracket of prices which I mentioned previously to be a danger area. And this area is 14,136 to 14,712, and we have just marginally passed the last April high, which is at 14,298.4. So all since based on the chart, there's still no reversal signal. It does looks very, very bullish right now. And of course, we knew on Friday the reason why the Nasdaq 100 got kicked even higher was because NVIDIA earnings guidance has been very, very positive. And what I'm afraid is that there's a lot of hype in this particular news saying that NVIDIA now will be one of the most valuable company ever. So we will have to see what happens beyond that, because this is not earning, it is just a guidance. Okay, so just be very careful. In Asia, we can see that the Nikkei peaked out on Friday, on Monday itself, which is yesterday. Market went up to a high of 31,560, which is just a touch below my target of 31,605. And this morning, the market is coming down a little bit. Too early to say that we have a reversal. We have no reversal at this moment in time, but it does look like it may have already hit target. So just be very cautious chasing this market ever higher. There's no reversal pattern even in the daily time frame. What I'm showing you here is the 4 hours time frame, and just be careful. Okay, over in Hong Kong, we can see the Hong Kong market remains very, very soft. Yesterday we have a new low for the year at 18,517.8, and this morning we have a bit of a rebound, but not by very much. This area is actually quite conducive for buying interest to actually re-emerge. The area is 18,256 to 18,737. So this area could see some kind of buying interest, at least for profit taking. So short term, I do expect a bit of a bounce, technically speaking, but whether the market has found a bottom, I do not think so, because if you look at a higher time frame, the fall from 22,700 does suggest that we may see a deeper pullback all the way to test the area between 16 to 17,000 levels over time. So do watch out for Hong Kong markets. And over in China, we can see the CSI 300 is basically mimicking what we are seeing in the Hang Seng Index. And this three-wave pullback from 4,267 does appear to have hit equality for now. So right now, I think the market may be supported, technically speaking. So the low so far is 3,815.5, and it has been holding on since yesterday. So today we have no new low being traded, so that's a good sign. So maybe for time being short term, we should be able to see a bit of a bounce in Chinese equity markets. Over in energy, we can see the WTI has been holding water yesterday. The high traded last week was $74.69, pulling back to a low on Thursday itself at $70.94. That's very, very highly possible that the market may actually extend a little bit lower, ideally to somewhere between $67.88 to $69.76, which I deem to be a good place to actually position long. I myself will be looking to buy around this area. Immediate target obviously will be the much high at $76.07, with the potential the market to rally all the way to test the $80 per barrel. And we also have updates saying that the US petroleum reserve is starting to be filled up, and that is good news. That should be bullish. On top of that, we have OPEC Plus with the MBS, who is the crown prince of Saudi Arabia, saying that basically warning short players in the market to be careful, because he said for those short sellers out there, prepare to be out. Okay, that's what he said. Okay, and over in precious metal markets, we can see the market is consolidating. The low so far as of Friday last week was at 1,936.85. Yesterday, we do not have a new low. The market basically holding on. But overall, I do suspect that the market have not hit the bottom yet. There is room for the market to actually go down towards an area which I think will be very likely to see in the near future, which is at 1,915 or 1,916 area, which is my projected target. Top side, if the market do rebound, I think the market may actually meet initial resistance at 1,984.3. So this is the high that market could not overcome the last time it did that, which was last Wednesday. So even at the most bullish, I think the market will be kept somewhere between $2,009 and $2,026. So overall, this downward move here does not appear to be over. I do suspect over time it may go down to as low as $1,836 to $1,864. So do watch out for this possibility. So in the meantime, if the market do rebound, it is very likely to be a selling opportunity. Okay, do watch out. And of course, in the silver market, we have seen how the silver actually bottom up within this price of range between $22.28 to $23.02 on Friday, with a low at $22.68. So this bounce here has been quite supportive. Top side, I think the market have a cap here at $24.21 thereabout. Again, how the precious metal market reacts will be very much dependent on whether gold can find a bottom, okay? And that is also dependent on whether the dollar continues to go higher. The dollar index itself have gone up to a high of 104.34 on Friday. Yesterday, obviously, there's no market. Okay, and the market right now, top side is possibly to test the March high at 104.72 before I think it will meet some kind of selling pressure. If the market do pull back for the time being, assuming the high 104.34, then an area between 102.43 to 102.88 seems to be a place to position long for another leg up beyond the March high at 105.87. Okay, so long term, I do see dollar do recover, and any pullback is a buying opportunity. Over in the principal currency, we see that the euro has actually bottomed out at 107.02, and there was no new low traded yesterday, despite the fact that Germany has technically gone into recession. So overall, that should be a bearish factor to consider. So if we see any kind of rebound in the euro versus the dollar, it is possibly a selling opportunity here. And if we get a bounce back to 109 to 109.5, I think that would be a great area to position short. Okay, and over in sterling, we can see sterling has managed to hold out at 123.10 thereabout, and we see a bounce. And this bounce, if you ever recover back to 124.90 to 125.30, that would be a great level to again position short, because overall I do suspect that the dollar may actually recover beyond last week high. Okay, or the Aussie dollars is also having the same outlook. We have a low at just under 65 cents, and market bounce back now to 65 cents and 0.6565 thereabout. And short term, I think the much low which previously has been holding out the market now could be acting as a resistance. That level is 0.6565, and then considering that with this black line, where this black line is used to be the support line, now could be turning as a resistance. So that level between 0.6565 to 0.6580 could be the immediate cap to higher prices. But in the event a market punch through this level, go back into the support line, then their top side could be somewhere around 0.6655 to 0.6695. Okay, this will be a much better area to position a short rather than this area over here below 0.6680. Okay, over in the dollar Canadian, we can see that the dollar Canadian actually pick up on Friday at 1.3655, and we can see yesterday market actually pulled back. This morning we have a low, at least for now, at 1.3578, and if this is the low for now, if the market do rebound back in the afternoon to 136.11 to 136.21, which is about 10 pips away, 10 pips apart, then this area could be a potential level to actually sell. Although the ideal level to sell was way up here, but the market actually dropped short. Okay, my target was around 136.57, the high was only 136.55, so we missed out by 2 lousy pips. And if we do get a chance to go back into this bracket, I would love to sell this dollar versus the Canadian, because I think that the equality rebound from here actually picks out around this level here between 136.60 to 137.20. Okay, dollar yen does suggest that the market may or may not has already picked 146.87 was a high, I think, yesterday, and the market does look like it does not seem to want to come back down yet. In the event we get an extended rally beyond 140.87, the top side here will be somewhere between the November high, which is 142.25, or the 141.65 to 142.85 level, which is, I think, where this top is likely going to be over time. Okay, so if the market actually went up to just rally to 141.60 and above, look out for a selling signal here to position for a retracement in the dollar. Okay, over in Bitcoin, we saw how Bitcoin reacted on news that there is an agreement in the debt ceiling negotiation. This happened on Monday after the weekend itself. Market went up to a high of 28,554, but couldn't hang on. Market immediately came back down on the back of a reversal pattern here. We can see on the 4 hours time frame, this is a what we call a shooting star, and this is essentially a classical reversal signal. And if the market do pullback, in the event pullback to 27,745 to 28,200, I think that will be a better levels to position long. I have already gone long, and within this area here, so I'm hoping to buy some more if the market pulls back into this level, which is 27,745 to 28,200 levels. My immediate target obviously will be the very round number at 30,000 for the first target. Okay, so this is my outlook for now. So I will see you again tomorrow. Let's see what happened on Wall Street tonight as they react to the debt ceiling agreement. Bye bye. Take care.